Let's get a move on then and focus in on the credit policy. We've got Pranjul Bhandari, who is now joining in from HSBC Securities to chat a little bit more about that. Pranjul, great to have you on board. Many thanks for joining in. Let's just talk about the overall macroeconomic backdrop right now. While inflation continues to remain a niggling problem, you also have the growth scare, the lowest in the last 6 years. In the backdrop of this, what do you think as, from a policy standpoint, takes more precedence? Is it the slowing growth and therefore, a rate cut is absolutely inevitable?
Well, look, our forecasts are that there will be a 25 basis points rate cut this policy meeting. In some sense, our forecasts are not very different from what we've been expecting in the last couple of policy meetings. The same package, a 25 bip rate cut, keeping liquidity surplus for longer, holding on to an accommodative stance. That whole package, I think, will continue today as well. Couple of things though, I think they'll have to bring down their growth forecast. Last time they went with 6.1% for this year. We are at 4.9%. So I think they'll bring it down, halfway down to about 5.5%. And they will have to push up their inflation forecasts. They were last at 3.4 for this year. And I think inflation is going to come in closer to 4% this year. Will this spook the RBI? Yes and no. Yes, because of course, 4% is the target. And if inflation for the next couple of months is going to be elevated closer to 5, then that should spook the RBI. But no, because a lot of it is being driven by transient pressures. For example, a vegetable crop that has gone bad. As soon as a new vegetable crop arrives in December, January, some of these pressures could come down. So I think RBI will look through some of the rise in inflation for now and go ahead and give the 25 basis points rate cut.
Okay, fair enough. That's what the expectation is. But Pranjul, while this seems to be a given, most of the economists as well that we've been speaking to seem to indicate that, yes, a 25 basis points rate cut is the need of the hour. Do you believe that given that the start of the year we've seen about 135 basis points rate cut by the RBI governor, that we haven't really seen the transmission play out, that maybe a little bit more ammunition from the Reserve Bank is what is required this time around?
Well, you're absolutely right. The Reserve Bank has done everything it can in monetary policy, cut rates, give a lot of transient liquidity. But the problem is that the banks are not transmitting this into the real economy. I would say that the banks are petrified at this point. They started the year with elevated NPLs, and at this point, with growth slowing, NPLs could only tick up, and there's a lot of uncertainty about asset quality in their books. I think the banks are legitimate in not functioning normally. There's just too much uncertainty about growth and not passing on rate cuts and so on. So that is a problem right now. But I also believe that over time, some of the transmission might just happen because, the deposit base takes about a year and a half to reprice. So that normal process, as it evolves, some sort of transmission will pick up. Will it be great? Will it be the 60-70% transmission we've seen in previous cycles? I don't think so, because there are a lot of balance sheet problems, the bank NPLs and so on that I spoke about. But will it be better than what it is right now? Yes, I think so too. We may end up having about 50% transmission in the next one and a half years, if not 70% transmission that we've seen in the past.
All right, fair enough. Pranjul, going forward, what's the expectation from the Reserve Bank? Do you believe that this is just setting the stage for what's likely to come in 2020 by the way of the Reserve Bank? Do you think that with the current macroeconomic backdrop that more rate cuts will continue to remain at the forefront, or the need of the hour rather?
Well, I think, look, we're coming close to the end of the rate cutting cycle. After this policy meeting, we have expectations of one more rate cut, in the first quarter or the first few months of 2020. But I think that should be about it, because then what will happen is that real rates will become too low. They'll fall, well below 1%. And at some point, if rates fall too much, it hurts your savers, it hurts your depositors, it hurts your pensioners who live off interest income. So a balance has to be struck. So I do think that the RBI will continue to sound accommodative and to hold on to accommodative stance. But I think after a rate cut next year, I don't see space for more rate cuts happening. I also want to put in one word on core inflation. Nobody talks about it because it's low. In fact, last month it was growing at 0% month on month, seasonally adjusted. But the truth is that as soon as growth picks up a little bit, core inflation can go soaring up. And these are the kind of things RBI will have to become conscious about, especially towards the middle of next year. That is core inflation well behaved. It's not a problem now, but it could become a big problem towards the middle of 2020.
Okay, just to stress upon that point that I brought up regarding unconventional methods or measures in order to revive growth, there are talks of a mini version of the asset relief program that's similar to what we've seen in the US in order to alleviate the stress within the financial sector. Is there something on that front that you think could be doled out by the Reserve Bank? Is that something that you'd hope for, rather?
Well, look, I don't expect any announcement on that today. I think today will be a pure monetary policy sort of a meeting. And, I'm not even sure if anybody is, where this conversation on TARP it has gone at this point. I know there's a lot of media about it, but, I'm not sure what the underlying facts are. The truth is that you have to think about these things extremely carefully. If somebody buys, toxic assets from the market, what kind of assets will it be? Will it be production assets? Will it be financial assets? Because both can be very different. Who will monitor? Who will decide? These things, these operational issues become very important in India. Take, for example, the 250 billion rupees real estate liquidity fund that was announced a month back. Has the money started rolling out in that? I don't think so. So, just announcing something doesn't ensure that it will happen. There are a lot of operational challenges that we face in the country at many levels, especially if it's public sponsored money. So I would say, don't have too much hopes pinned on something like TARP. It can become extremely complex. There are a lot of other things that the government can do. And I think at this point, the right thing to do would be have an asset quality review for the shadow banks, strengthen your insolvency and bankruptcy code. There are a lot of stalled investment projects, stalled for reasons such as coal interlinkages. Get those revived. Get some disinvestment through the door. A lot has been said. Now let's see it happen in practice. There's a lot that can be done, and if some of these can actually get done, then we're in a good place in 2020.
You've really brought up some very valid points as well, Pranjul, as to what the Reserve Bank could potentially do in terms of other steps that are much needed. But given that we're looking at a backdrop of fairly weak credit growth as well, what is it that you're expecting from the Reserve Bank in terms of their views on credit growth?
Well, the Reserve Bank doesn't really give you any expectations on credit growth, except obviously telling the banks to transmit rate cuts, and I think that will continue. So my base case is that the Reserve Bank policy may not sound very different from the last couple of policies that we've had. That's about what I'm thinking at this point. With the 1st October linking of lending rates in certain sectors to external benchmarks, some transmission may just happen on its own, and I think the RBI will share some of its numbers, that how have things improved since 1st of October, and I'm looking forward to exactly what comes out there.
All right, thanks very much, Pranjul, for sharing with us your outlook as to what to expect from the Reserve Bank. In just about an hour to go, and we'll have more clarity from Shaktikant Das on the policy.